Hi everyone, I'm Shruti and welcome back to G2 Finance Tech's weekly market update, your go-to rundown of global market moves and what they mean. This week, we are seeing glimmers of optimism but risks still linger. Let's dive into it. US markets rebound but fragile confidence. Markets rallied as trade tensions with China showed signs of easing. Nasdaq led gains, small and mid-cap notched 3 consecutive weeks of growth. Corporate earnings 73% beat expectations, adding to positive sentiment. But business activity slowed. Flash PMI at a 16-month low. Durable goods ordered surged mainly due to a rush on aircraft purchases. Housing market remains weak. Existing home sales fell nearly 6%. Consumer sentiment dropped again. Inflation expectations spiked to 6.5%. Treasuries gained. Gold hit near record highs at around $3,300 per ounce. While optimism returned to Wall Street, across the Atlantic, Europe also caught a wave of positive sentiment, but not without warning signs. Europe, market bounce, growth fears persist. Stock 600 up nearly 3% with strong showings from Germany and France. Germany downgraded its GDP forecast to flat growth. ECB officials cautious, recession unlikely for now but risks rising. Eurozone PMI slipped slightly, showing slower momentum. UK retail sales surprised to the upside but consumer confidence weakened. From Europe's measured optimism, let us swing over to Japan, where markets remain resilient but new pressures are building. Japan. Inflation up, relief measures in play. Nikkei rose nearly 3% on hopes of eased global trade tensions. Tokyo core CPI jumped to 3.4%, fastest in 2 years. Bank of Japan remains cautious about future rate hikes and global uncertainty. Yen softened slightly, bond yields edged up. Japan unveiled emergency measures to protect key industries from tariff impacts. Finally, let's head to China, where the focus is shifting towards readiness for fresh stimulus. China, watching and waiting. CSI 300 and Shanghai Composite posted modest gains. Politburo pledged full preparedness for external shocks. Quarter 1 GDP growth was better than expected but front loaded ahead of tariffs. Analysts anticipate new fiscal and monetary support measures if needed. So, globally, we are seeing stabilization but not a full recovery yet. Key takeaways: signs of market resilience, but risk still simmer. Trade tensions easing, but growth headwinds remain. Inflation and policy uncertainty continue to shape the outlook. At G2 Finance Tech, we believe it's time for balance. Stay nimble, focus on quality, and prepare for a dynamic few months ahead. That's it for this week's G2 Weekly Market Update. I'm Shruti. Thanks for tuning in, and we'll be back next Sunday with another global snapshot and fresh insights. Until then, stay informed, stay ahead.